Trump announced these sweeping tariffs, we immediately saw a pretty stark reaction.
Tariffs rattle markets with a sweeping sell-off.
Is it the end of U.S. exceptionalism?
The simultaneous decline in the equity market, in the bond market, and in the U.S. dollar. All three of those together tell you that there's that sense of disquiet.
So what happens when the world's favorite money-making bet is no longer a sure thing?
When you're talking about American exceptionalism, you're talking about three pillars here. You're talking about growth, liquidity, and rule of law. These are the pillars upon which this American exceptionalism has supported itself for over 2 decades now.
Let's take a minute to drill down into each of these pillars. First is growth, which is another way of saying the stock market.
US companies are completely entangled with global growth, especially the tech ones. If you take any of those big magnificent seven, as we call them, a very, very large part of their revenues is made abroad, not in the US.
What we've seen is from 2018 to 2024, something in the order of 120% increase in the S&P 500 versus a Euro Stock 600 that was only up like 30% in that time frame.
The second pillar is liquidity, aka can you get your money back in a hurry? And by money, we mean dollars.
The dollar occupies a really special role in the global financial system. It is the world's safe asset, the world's reserve currency.
No currency is as liquid as the US dollar.
The dollar is involved in 90% of FX trades. The dollar is also the global trading currency, right? Almost everything is invoiced in dollars.
Third is the rule of law, which supports the safety and stability of the financial system. And this is where US Treasuries and the bond market are especially important.
America creates a lot of debt.
The US exports that debt by selling bonds, little IOUs from the mighty US government, backed up by its agencies, courts, and Congress.
It's basically exporting this idea of rule of law, institutional stability. Investors who are buying a US Treasury don't have to worry about credit risk.
And so it was that in April of 2025, we were hit with, well, this.